Hello guys, this is Sochi and you're welcome back to Sochi Forex. In today's video, we want to look at moving average tricks that can help you identify a pullback and a reversal. It is not everyone that can easily understand how to mark out the structural point, which is a higher high and a higher low. So for that case, I'll be sharing with you a two more easier way today, which you can identify your pullback or a reversal, so you can be able to differentiate these two methods. The first method is by using a two low and connecting a trend line, which is going to be that when you see a price moving in this way, you have your first low here and your second low here. So all you need to do, in our previous video we said to draw a trend line you need point A. This is your point A and this is your point B. So all you need to do is for you to connect your trend line to point A and B, and when price go out of it, just as it went, you are now waiting for a pullback to happen, just as we have in that scenario. Okay, so that is a typical way of how to identify a pullback. And if we want to identify reversal, here we have point A and point B. So we'll be connecting our trend line to this, and having connecting our trend line to this point A and point B, price went and pulled back, and we have our entry at this point and we bought. So we take profit here, and then another pullback is happening. That is price coming back towards our trend line. So after we have our entry here and we take our profit here, price pull back towards our trend line, and unfortunately we don't have an entry signal here, so price break through the trend line. So in this case, this is no longer a pullback, it is now a trend reversal, and you can see that price is now going to the downside. So we will now be having a new connection of our down trade, looking for opportunity to sell because price has reversed. So the second way, which is the essence of this video, is how we can use the moving average. So what we'll be doing, we'll set up our moving average, which is the 200 EMA. That is 200 exponential moving average on our chart, and see how price behave around it. So we have established that once price is above the 200 EMA, we are in an uptrend. And if not until price break and close below it, we are still in a pullback. So whatever price do above the 200 EMA, it is a pullback. But once price break through it to the downside, just as we are having here, it becomes a reversal, which is a change of trend. So let's go to our chart and see what we are talking about. Now looking at this chart, you will realize that we have two indicators, the Bollinger Band and the exponential moving average 50. So the blue lines, I beg your pardon, the exponential moving average 200. So the blue line you are seeing here is our moving average, while this is our upper Bollinger Band, which is the green color, middle Bollinger Band, and the lower Bollinger Band respectively. So in this scenario, our focus is to see how we can use our 200 EMA to determine whether we are in a reversal or we are in a pullback, which is a retracement. And so we've established now that whenever you see price moving below this 200 EMA, you are in a downtrend. And when you see price moving above the 200 EMA, you can see the 200 EMA here is below and price is above it. So when you see price moving above it, it is established that we are in an uptrend. So price left the downtrend side, went up, and it's now moving above the 200 EMA. Okay, so this is how simple we can identify this. So if you look critically, you realize that there is no much difference between where the line of the 200 EMA is and the middle Bollinger Band. You realize that they are almost together at the same place. So for that reason, I personally don't use the 200 EMA. I use the Bollinger Band to serve the same function of the 200 EMA because there is no much difference between the two of them. So for that reason now, I will delete my EMA 200 and I'll be using the middle Bollinger Band. So I am using this now to serve the same function. So it simply means that once price is above this middle Bollinger Band, you can see price is below it. So any pullback to the zone here, anything that happened below here, price will come down, pull back towards it. I see it as a retracement, is a pullback. But once price break it and close above it here, I begin to see it as a reversal, which is a change of trend. So if I want to trade this now, price has already break it from here, and this is the low that I have. So if I want to trade this, I will pick my Fibonacci and I will mark this previous low to this high. Why I am doing this is because price has already break to the upside. So I already have confirmed that it has reversed from a downtrend to an uptrend. So price pullback. I remember we say from our 50 level of the Fibonacci we can look for entry. So here is more or less like a double confirmation because I can see this pin. I can see this pin-like candlestick pattern that got rejected from this 50 level, and I am seeing a divergence on my TDI. Here is a divergence. So the TDI is giving me a divergence between these two candles. Then the candlestick pattern is a confirmation, and I will go in for that entry. So that is how simple it is for me to use that pattern to find my entry. Again, here is my divergence. You can see what the indicator is doing, and look at what the price is doing on the main chart. So this is a typical divergence. So for me now, this is an entry and this is a pullback 50 level of the Fibonacci. So you can go on and on to identify this. Okay, here you can see now price move from this zone to up here, and now price have closed above the upper Bollinger Band, which is a confirmation that here is no longer a pullback, but it is now a reversal to an uptrend. Okay, so I'll pick my fib and mark. I'll fib this level because there is a little pullback, but this particular pullback, I am not having an entry here because this did not reach my 50% level. Then I wait for another movement. It creates a new high, so I'm going to mark this new high now. Okay, I have my new high marked out, which is from here to here. That is my range. So this is my range, because the pullback is here and price went here. So that is my range, here and here. So you see my Fibonacci, and look at what price pulled back here. It went up. That place still remains my range because this did not close above this, and then it pulled back again to 88.5 and give me a beautiful engulfing candlestick pattern. And then you can see the follow-up candle, and we have this move to the upside. So this is how to trade reversal, and this is how you can take advantage of the moving average if you cannot identify structural point of higher high, higher low, higher high, higher low, as the case may be. And I believe you've learned something new. Please do not forget to like, do not forget to share, and subscribe, turn on your notification bell so you'll be the first to get notified whenever we publish our video. See you in a subsequent video.